Whether you're thinking of trading with imbalances or you already trade with imbalances, watch this presentation of videos that is going to take your trading to the next level. Let's dive into it. About the imbalance trading strategy, exactly how you'll be able to use imbalances and understanding where you'll be actually applying this when looking for a trade. Now, I'm also going to go through in today's video how you can apply this to the higher time frames. Normally we'll go through the lower time frames, but there are many traders out there who still don't have that time to trade the lower time frames. So today we'll look at actually taking a trade on a daily time frame and how you can use this with candlesticks to your advantage. Now that means we'll be starting on a monthly time frame. Yes, we're on a very high time frame, but bear with me and watch this video to the end to see how easy this is to apply on any single time frame. If you can apply these types of strategies on a monthly time frame, you can apply it all the way down to 1 minute. Now, the best location when we're looking for a trade, if we're looking for any type of trade, we're either going to be looking for a trade off an area of supply or demand. So off an area of supply in the market, you'll be looking for a trade to come into an area of previous supply. Now, if you're not sure how to draw those zones of supply and demand, there are many videos in this channel to help you to understand how to do that. So you're either looking at an area of supply and demand when looking for a trade, or we're looking at previous highs and lows in the market. You can see how the market pips above, sweeps that high, and we drop away. You can also see how the market came back into this area of supply and you've got a trade. Now the final way, which is actually about in this video today, is you can look at the use of imbalance for your entry. And what I'm actually going to do is I'm going to look at this area on the chart to how you can actually have caught a trade here, understanding the imbalances in the market and the use of previous highs and lows. So let's clear everything off this chart. We're going to go closer into price and we're going to actually take a look at this area on previous price. So the first thing you need to understand is where's price been going? Well, we can identify that price broke out of this previous high and we left this previous higher low. Now you can see that price is actually now being held at this area. We can see prices bounced off on many occasions. We're now coming back to this previous low, and we'll be looking for price to either break through this level now to show us the continuation to sell this market, or we're looking for price to show us another bounce to the upside. Now you can easily identify what happens here when we have this previous higher low in the market is broken to downside. Now if we was to go to a daily time frame where you'd be looking to take your trades, you'll be able to find here an area of an entry which will go through at this here on the chart, how you could use the imbalance and the use of supply and demand. What we're actually going to look at now is this spike up above this previous broken structure to downside. You can see here we have the low of this candle, the high of this candle, which leaves us a gap in the market. This is the area of imbalance that you'll be looking for an entry of. So this is an area of imbalance that we can see on a monthly time frame. And remember, an imbalance will be on any time frame, just like an area of supply and demand. And it's here you can witness and see that we have a push into this previous structure break, a high. We create another high, and that's creating equal highs where we have an area of liquidity in the market. And we have a push up, taking those highs into this era of imbalance, and we drop all the way back down to the previous lows. Once you understand it's those highs and lows in the market which will generate those areas where you're looking for a trade, it will become much more natural for you to find an entry. Now, we've actually gone through a monthly time frame here, basing our area of direction using the highs and lows on a monthly time frame. Now, once you've done this, you can drop down to that area on a daily time frame where you can start to look for those trades. So we're going to use the previous area where we see price pushing up into. Now you can witness here by looking at this area on the chart right here, we can see the highs are being held below this level. We have a final push through and a drop back down. Now it's this area we're looking at, is this candlestick on a daily. Now we see a nice bearish candle to downside. This is where you could have looked to pull the trigger based on this candlestick. Or you could have waited for the market to break structure. We do have a structure break here in the market. We break through, we pull back, and we drop away. We pull back once again. and we see that we pull back into this area of supply, we could have called a trade to the downside. It doesn't matter whether you're looking for an entry off an area of supply or an area of imbalance, or you're looking for those highs and lows to be removed. It's always going to give you a trade once you understand those higher time frames. Remember, it's all important that you do your top-down analysis. So looking back, we're going to see that the market, not only did it take and remove this high in the market, we also removed this high, and we removed this high in the market. So this one candle here wicks up. Well, in fact, we already closed this high, so we remove this one. You can see that we wick up through these two previous highs. Now what that's doing is taking previous stops. It's an area of liquidity in the market where their stops are sitting, it's been removed and taken, and we see the market dropping away. But if you look more closely, we also have sitting right here in the market, drag this across, is our area of imbalance. So there's your area of imbalance where price wicks through those previous highs, collects those orders inside that area of imbalance, which is basically a block of orders being left behind. There was an entry. Now before that, I did say we saw this reversal here in the market. We have this area in the chart with this high, we've dropped down, made this low, we pulled back this lower high. So it's right here you could have caught a trade. Now on this occasion, you can apply the same technique, just went through on that monthly time frame. You're looking for where the market's going to break that structure. We break structure here to the downside. Now, one, we have an area here of supply. So we have an area of supply left behind. But remember, what I said at the beginning of this video, it's important to understand where your previous highs and lows sit. This is our previous high. This is the area we want to see the price take, where it's going to take those stops. And what do we see sitting just above that area? Just mark this level out. We have our area of imbalance. That's where those block of orders are sitting above this previous high. Now we do have just above there as well, this leftover area of imbalance. You can see that gets filled on that next candle. We push up into the next area of imbalance. Now we don't quite go into the supply zone, but that's okay because we see on this bearish candle, nice wick up, close bearish back below this previous high. That's where you can look to sell this market all the way back down to these previous lows. Now it does take some time to get there, but we do get there eventually. This would have been the first low. You can see we do hit that low, and then we eventually go to the next low. Now in this area, you could go down to lower time frames. You can be looking for that trend reversal or that confirmation entry, change of character, for that entry at this area to go short. Now all of this you can learn more inside this channel. So that is how you can apply this type of technique with the use of the imbalance trading strategy, and understanding that those previous highs and lows will work on any time frame. This is a daily time frame where we saw these entries you could have taken, where it was this entry here with that reversal, and again you could go down to lower time frame here to look for a better entry. But going back to the monthly time frame, we also looked at a monthly time frame. We could see where the market is likely to go based on the previous highs and lows. When we see the break of structure, we have previous highs. Here you can see the market. Yes, that's more easier to see perhaps on a daily time frame, but understanding that these highs are where the market's going to want to go to take those stops into the area of supply and demand or into the area of imbalance. That's why it's important you have a good understanding of not just supply and demand, but you need to understand some smart money concepts where the market's going to make those manipulations to find those block of orders. Now those block of orders are hidden inside those areas of imbalance. Now if there's any questions at all you have on today's video, don't forget you can leave a comment below this video. Ask me anything on today's video and we can go through it together to hopefully help you going forward in your own trading. Now we're going to go through the pound US dollar chart. I'm going to do a replay mode on a daily time frame. We're going to go through exactly how I would determine that directional bias. Now we're also going to go through how you can look for a trade and targets using the imbalance zone. Hey traders, we'll get back to the video in just a moment, but I want to give you a gift for hanging out with me today. I want to give you a free trading strategy class and cheat sheet. This trading strategy class and cheat sheet will go through everything that you need to know about applying a supply and demand strategy that I personally use to generate profits. But it's more than just a strategy. You're going to have some actionable steps to accelerate your growth with learning how shifting your focus can generate you more profits and the steps to building a profitable strategy for yourself. You don't have to spend a lot of time on this. It's about doing the right things in the right order, and it's free as my gift to you. So just go to norfolkfxtrader.system.io free strategy class sign up, or hit the link above now to get your free trading strategy class and cheat sheet. Now back to the video. So let's now go through and understand how you can use this directional bias on a daily time frame. Now, the first thing I'd always look for is where is my previous low in the market. Now, previous low in this downtrend, we just zoom out quickly. This is in a clear downtrend. This is our last low in this market. This is where if price gets below this low, I'm not going to be looking to sell this market anymore. I'm going to be waiting for that retracement back to an area to look for a sell. Now, everything will be much more clear once this happens. So when price does eventually break this low, which we'll see if we go forward, if this happens. Okay, so now we've broken this low, we can draw out this lower high in the market. That is our lower swing high. Now what this is going to start creating is this is going to be my swing to downside and is going to be my trading range. Now we're below this low here in the market. We're not going to be looking for any more sell trades. This is not what we do as a supply and demand trader or a smart money trader. We wait for that retracement to look for another sell back down, or we look for the reversal counter trend trade back to the upside. Now I will show exactly how you can do all this in this video, so keep watching till the end. So right now we've taken any stops here, we've broken through, but what do we have on the way down? Well, we can now start to mark out areas, which these are areas of bearish. We just change the color to a bearish imbalance. So this is a bearish imbalance where you could be looking for the market to come back for that better entry out of this area where we have hidden areas of blocks of orders. And it's here we're going to see the market drop back to downside. So let's remove this. Now we'll continue to look for the reversal. Now the reversal, we will need to see a close back above this level currently. Let's continue forward and see what happens. So now we'll move this level down here. Yes, you could have perhaps caught a trade down, but why look for a trade here in the market, risking being caught out on a reversal back up? Now let's continue with the next candle. Now we see a reversal. So this is now to show you that the market has broken through these lows where we had potential areas of stops, taking that money out. Now we create the reversal after this bullish candle closes back above this level. Now what I'll be looking for a potential pullback to retest this level, to go back up to fill this first area of imbalance. So I've just removed those levels now. We'll have an area here of imbalance which needs to be filled first. We haven't yet gone into this imbalance. Now we could see a reversal here, but if I was to quickly use a Fibonacci to downside, there's my 50% level. This sits below the 50%. I'm expecting price to go above that 50% to look for an entry to sell with this trend. So my bias at the moment is going to be looking for a sell above the 50%. So I'm expecting this area of imbalance to be filled. So if we was to look for an entry off this level, we know we can easily target this area to be filled. Let's go to the next candle. So go forward one candle, and there you go. Okay, so we see the pullback. Now you would be able to find some kind of entry on the lower time frame here, understanding this. We pull back into this level, we fill this imbalance straight away, and we've gone up to the 50% area of this candle. Now this is now going to show me a potential reversal. We're above that 50% on that Fibonacci pullback. And also, we can now draw out this low as our swing low. So this is now my trading range. Now there is a video in this channel that goes through that trading range also, but this is now the trading range where I'm looking for that pullback. That's where we can start applying the use of the Fibonacci pullback at that area above that 50% into that golden area. Now, understanding everything here about these imbalances is key to understanding how to find an entry here. We're not talking about the entry, we're just looking for that directional bias. Now, we knew the directional bias changed once we saw this bullish candle closing back above this level. And we knew where price was going to go next to those areas of imbalance. Let's continue forward reading this bias. Now, currently, where could price now go next? Well, price has got to go to take these lows. So this now would be where we're looking for an entry out of here to target taking these lows. Now, once price takes these lows, as we saw here, we're not going to be looking for any more trades to the downside. We're looking for that counter trend trade. Remember, any entries here are counter trend. So if you're taking a counter trend trade on that pullback, remember, lower your risk. Your high risk entries are going to be taking them from this area of imbalance to the downside. So continue forward, we have an inside bearish candle. We may now see a take of the high of this candle and then a drop once again. So inside, a small pullback, and now we're starting to see the drop away. So we're now having, again, a reversal. We can mark off this level. This is where we see the same thing happening from the opposite direction. We see the push up, the hold of this level on once, twice, 3, 4 times, and eventually now we see the directional bias is changed back bearish. We're now closing this level, indicating the market from here will now take this low. That is how you read directional bias. That is the way I do with my directional bias, understanding all this. So we continue forward, you're going to see the market will now want to take this low. We continue to fall. Now on the way down, we can identify areas here of imbalance. We have a small area left over. And the market continues to wick down. Let's remove this arrow. And now we've wicked that low. Now for me, that is taking that low. So after we've seen this candle close, no more sales are on the table. Now I'll be looking for any pullbacks to this level. So let's now mark out with this level. If we see a reversal here, our bias is changing. Currently the bias is still bearish. I'm waiting for a bullish bias to take a counter trend trade back up to look for a sell again. So let's continue forward. And remember, now our swing high becomes this high here in the market. Once we close this low, or we spike this low, we only need to see a wick taking that low. This now becomes my trading range. So from this high to this low is my trading range. My directional bias is still bearish. But if we see a reversal like we saw here, the bias will change back to the upside. Okay, so remember, we saw this candle showing you the bearish bias was once down again. So what do we have here? We have our 50% level right here. So we need to see the market come above this level into this area of imbalance before we can even look for any more sells. Let's continue forward. So we continue to go bearish. Now this level stays. Now we made a pullback, retested again with this big wick to downside. Let's continue forward, but now we've closed back down. You can see the market's closed below this level. So now we can mark off our new level. Now the market started to show me a ranging market this low in the market. That's why we don't look for these sell trades here. Yes, you could have caught a sell at this area and we could have dropped back down, but why do you want to be doing that when you can look for a sell up here or up here on this occasion on this swing to downside? So continue forward. So now we can see we have a take of this low, which is a manipulation in the market. Now manipulations is in this channel as well. You can learn more on those. And also there is the course, the masterclass course. Now we can see here, the market's likely to want to close back above this level. We've wicked it, tested it. So the market is now retesting that area and we continue to drop. And now we see the push back up. So what has happened here? Now we've made that reversal. So our bias has now changed on the close of this candle. Just as we saw our bias change on this candlestick to downside at this level, and where we saw our bias change in this candlestick at this level. Now we see a bias change to the upside. At the same time, we've taken this previous low here, wicked above it. Now that lower high is going to be on a 1 hour time frame, a swing high. Now we will look at this in a moment as well, once we've gone through this bias, to see how you could take a trade on a lower time frame. But this is showing me now that the market's going to want to come back to retest this level and head back up to our areas of imbalance. Now our areas of imbalance, there's an area here. This is a new one being created. It was to this high of this candle, but now it's been filled halfway and we've left this smaller area over. And again, we can use our Fibonacci tool from this high to low, and we can identify our 50% is here, which means that this area of imbalance is going to be hit very easily because it's still below that 50% like we saw back here on this area of imbalance. So again, if we just go forward one candle, the price pushed down. Okay, we didn't quite test that level yet, but we now have left over is this area of bullish imbalance. So now we have an area, we see the reversal happening on this candle. Our bias now is bullish. We have a potential target, a potential entry zone. So now if we go one more candle forward, and again, and there we have it. So there is our manipulation to downside below these lows and a push into this area of imbalance. Now a nice strong close back bullish. We know this is going to take this level. So we go forward. Our bias is bullish at this point still. And we now wick into this imbalance. We haven't filled it. We make a higher low and we wick into that imbalance. So that target has now been filled. That imbalance has been filled. That shows you continuation of the higher lows. We may see a drop back and eventually a push through. Once we see the push through this level, we know we're going to go to the next level, which is here. Continuing forward, we hold, and there it is. There's your momentum move to the upside, breaking and removing that area. And where do we go to? We actually retest this previous low. So we close at that previous low. Now, I've been looking for the market to continue up. Just move this across, because what we've got here is still a small area left over where the market's going to want to go back to. Now, if we're looking for a reversal here, this is our level we'll be drawing. Looking for the market to go up to this area. Continue forward. So we're still bullish. And there you go. We spiked through that area of imbalance. And we've closed back through this level. So currently, we're now looking for any tests of this level to look for any sell trades to go back to these lows. But before price is going to go to those lows, it would have to go to this area first. So this will be your first area expecting price to head. Now currently we also have here, we'll mark this off, this area of imbalance still above. Now this tells me that price still needs to go back up. Understanding on your range, this was a smaller range and this is your long-term bigger range, which tells me price may want to go back up into filling this imbalance. Pick up more orders, taking this previous high, and then to fall back down. Now to take this high, we need to see a close above this area. But that means we need to see a continuation higher. But currently we're looking for any sell trades now with this swing on this smaller swing back to downside. Okay, so now we've closed back up above this area, remove this area. That tells me price will now want to go and take this high and to go into this imbalance to sell. And that's what I'm looking for next to happen, for price to come up here to look for a next sell. We still have this smaller imbalance below as well. Now this means we can move this level up. We've just closed above. Now we've closed back down. Okay, so now it's looking like the market's showing a reversal, but we know that the market's going to go up to this area. So let's continue forward. We have a retracement. We have a manipulation now above these lows here. Okay, so the market's holding at this level. And what we're looking for is any reversals. So we reverse back up to this area. And the bias still currently is bullish. We haven't got a bearish bias because we've closed this level. But if we now look, we can start marking off this move down. So if we see a close back up, our bias will be back to the upside. So we continue to close down. And another continuation. Now we've actually shown an area, we made a higher low in the market. This area here is just a higher low, let's get that right. And we've just held below that level. We want to see it close back above. And now we've manipulated through and back down. So currently, the market is where we are. We're now seeing a manipulation of these lows. And what we want to see now is now a continuation to the upside. On a 1 hour time frame, I'm going to show you how you can actually start taking those trades. Now, this is that area where we see the reversal. This is a level where we see the break of that previous high. This level is the daily reversal level. We see the breakout, and this leaves this area of imbalance, which we see this next push up on a daily candlestick. Now, this is the area of imbalance where we're looking for price to pull back into on the 1 hour time frame. Now, this happens here. We drop in, we rally away, and we break structure. The market then pulls back into this area here. Now, on a lower time frame, you can probably look for a lower time frame entry with a confirmation entry. There's going to be an area of demand here or an area of imbalance, most probably on a lower time frame. Now, the market pulls back in. We get a run up into this area of imbalance. Now, like I said, this was an easy target. An entry from here to here is an easy target. This will be your next target. Understanding once the market hits this, you're expecting it to be filled. Now, it's not filled at this point. The market's going to come back to this area here of demand. We have a large down candle here, which leaves this area of demand. The market pulls back in. We rally back up to fill that area. And once again, we see this area of demand. Again, we see a break of structure. We pull back once again, and the market goes up to retest these highs, a final pullback, and there's your momentum breakout. When you see this breakout here, breaking this zone of imbalance, we know price will go to the next level. And it's here we can see the market pulls back inside this area of imbalance left over, bullish imbalance, and it goes back up to fill that area above. We even have a pullback again to manipulate this low, taking those stops. And finally, the market goes up to take those previous highs again. So this is how you can start looking for trades on those lower time frames, understanding that directional daily bias. We went through the first part of this video. Now you can apply this to any time frame on any currency, whether it be crypto markets or it's on the Forex markets. This will be applied to any market. Now, the first thing I'm going to do, I'm going to go through this area on the 4 hour chart on the EURUSD to current price. So you can see exactly how I would track price from this low here in the market all the way to the current price right here. This will help you to see the process I go through every single time when I'm looking for my trades. Now, it's not just this process. We're going to look at, once you've done this, you'll be looking at use of supply and demand zones and top-down analysis, multiple time frames, looking for that confirmation entry, anything else that you apply in your trading. Now, to help you with your supply and demand trading, there is much more in this channel to go through the supply and demand side. So let's start this area on chart. What we want to do, we want to be using your break of structure area. Now, all I'm going to show you today in this video is applying the break of structure for tracking the area of price and drawing out imbalance zones. Now, this is just to show you the directional flow of price, and it's going to help you going forward in your trading absolutely massively. So the first thing we do, we see this low in the market. We're looking for our breakout. There is your break of structure to the upside. So just mark this out. This is our first break of structure. When we see this, we're going to draw an area of imbalance. What I'm going to do, I'm going to go into this area first. Let's go close into the area so you can see the exact process of drawing out the correct zone of imbalance. That's right. So when we see this push up this area, from the high of this bearish candle, we have a push up. This solid full body candle is showing you the imbalance. We've created the imbalance from the low of this candle. Let me draw it out. Currently from the high of this candle to the close price of that candle. That is currently an imbalance in the market. Before we see any of this price, we move this over. This is what you'd be seeing. You would see this area of imbalance created. Now we still haven't yet broken structure. So we're still in this downwards trend here in the market. But look at the way the market has moved out of this low. This indicates to me we're in a bullish movement. Going forward, we see the break of structure. Now, this is where you can now fine tune this area of imbalance and you will draw it from the low in the market. So from that candlestick here, this bullish candle, from the low of this candle to the high of that wick, that becomes your leftover area of imbalance once we see the break of structure here. Now, this is where you understand the flow of market. We're seeing the break of structure, a reversal in the trend. We made a manipulation down here, but that's something for a different day. We've pulled back, made another manipulation here as well, dropping in to test this area of imbalance, and we have a nice move to the upside. Now it's right here, understanding the use of supply and demand, manipulations in the market, you can capture a great trade moving to the upside. Now, you could have gone down to lower time frames here and caught a great, probably 20-to-1 risk to reward even. But that is understanding the movement of price here. Understanding the flow of price was down in this downwards trend. We broke structure to the upside. We come back to this imbalance. We continued higher. Now, once we start doing this, we can see we have another break of structure here. So we mark this out, our break of structure to the upside. What breaks that area, let's move this over, is this candle here. And what do we leave behind? Again, we can mark out area of imbalance. Now, I'm going to go through much quicker now on the chart. Already drawn that imbalance, showing you how I draw it. So we've broken out of break of structure, pull back, retest the imbalance. Again, a lower time frame here. You'll be able to find entries on areas of imbalance, manipulations, areas of demand. We continue up. Again, we break structure. Now, I'm not going to sugarcoat this for you. You will lose trades in this business. And yes, it is a trading business. When you use any kind of trading in the market, you need to use it as a business, apply it as a business. When we break up here, this is part of doing business, you see. We have a reversal and you would have had a losing trade potentially. Now, the reason you had a losing trade, because we see this area of imbalance, let's say, and you've drawn this area of imbalance out. We have a test of it. The market starts to move up. We have a push up with this candle. At some point, this is a full body candle, white candle to the upside, and we have a reversal to downside. So at this point in the market, we've now reversed back to downside. We've had a losing trade. At some point, the market is going to reverse. You're not always going to capture that reversal. Hopefully I can show you a point where we could have caught the reversal. Of this, would not have caught that reversal. And this for me would have been a losing trade. So you will take losing trades in this industry. It is part of doing business. But we're tracking price here. Look, we can see that the market, let me use the arrows so you can see every time we have a bounce. So we rally up, break a structure, break a structure, break a structure. We come back to those areas of imbalances. This is for tracking price, remember. Now, when we see this push up here, again, this candlestick is manipulating the hell out of everybody. And then we see the big drop down. What does that break? An area of minor structure. Now, it's not a major break. The reason why it's not a major break is because this is our last low. When you see the break of this low here, this becomes your main break of structure. But it's still a minor break, and we have to consider this as a breakout. Once we see this, we can now mark out a new area of imbalance. Mark this out. That is our new area of imbalance. the market drops down. You can see we make some equal lows. Let's go to the right, shrink the chart down. And if we drag this across, where does the market come back to? We come all the way back up to test this area of imbalance, and then we break through. So now we can mark out this low here as another break of structure. This is where the markets come back. Now, I like to find, when I'm tracking price, I'm using the first area of imbalance. This is not a first area. This is the second area of imbalance. You can see price held at those areas. I'll draw it out so you can see, but not using it for this tracking of price, but we do test it, we drop down. The market creates, grab this tool at these lows. We have some equal lows, we have a manipulation, we push back up to take those highs. You can see the way we track price here, we eventually go up into this area and then we break structure. Now we break structure at basically this area of imbalance. We can draw this out. Price has not come back to that area. We have a very, actually this was closed, so we don't have an imbalance there or there in the market. So that's our area of imbalance. We break that structure. The market breaks a minor structure there. We retest. This is an area of imbalance left below. As price breaks this low, it's a small breakout right here. Look, the market creates this area of imbalance. It's filled straight away with this push up. At some point, you'll have seen a bullish candle. We drop away, we pull back again. We then break another area of structure. So identifying this is good to understand that this is an area we retest, we come back. So over here, you're going to probably find an area of supply for an entry. Again, you see, it's important to understand that supply and demand aspect because that's how we actually look for those trades. This is going to track price for me every time I look at the chart. Now, remember, you can always rewind this video and go back and look at how I'm doing this if you're not sure. So this is our breakout again. So this is our break of structure. Let's mark that off as a break of structure. We can also mark that one off as well. There is our breakout. This is our area of imbalance. Now we can identify straight away what happened here was we did remove this imbalance eventually. But look at this. We make the area of imbalance. We have a small push up into it and a drop away. That's how you can track price very, very precisely once you understand the way you can use this break of structure and drawing those imbalances. So we do have this area of imbalance again, which is formed after we break this high and we drop away. But there's no break of structure, so I'm not going to actually draw this one for the flow of price. Now remember back here, let's just go back in time. I said where you're going to have that losing trade. There was no way of knowing here that this was going to happen. And unfortunately, as I said, that's part of doing business. Here is a different story. Let's zoom into this area of price. And this is for you. If you're still watching this video right now, give me a thumbs up that you're still watching this video and leave a comment and let me know in the comments that you were still watching this video at this point. Because if you've not been watching this video to this point, you're going to miss out on this area, which is gold, understanding the reversal. Now, when we see this area of chart, we see price coming down, we create this low, we can mark this across. Now, unlike the previous area, we have a very small breakout, very small breakout. Now, look at the previous time we saw that breakout. Big momentum candles. So this was still indicating price would potentially go higher. Right here, there's no real indication yet price will continue lower. And when we see this candlestick right here, zoom in, indecision candle taking both sides of the range of this previous candle. We took the high, we took the low. This indicates to me a reversal is about to happen. When do we know that reversal is going to happen? Is we can mark out this level. And again, remember I said about the video, understanding the reversal, that's coming at the end of this video. So make sure you watch that video. This candle closing through indicates to me price is going to go back up. So we're tracking price now. So price is going to go back up from here. We're going to break structure right here. So there's a break of structure now to the upside. We see the reversal down here. We're still in a downwards trend, but as we broke this structure here in the market, and we've broken this structure, let's mark it out. This is still a valid break to downside this low. So it's still a valid break to the downside, but it's understanding a break with manipulation, reversal, and a continuation with this type of breakout. Once you understand, yes, this one was a losing trade. This is not a great example, but we can see here we have a reversal, we have a breakout, the market pulls back to where? And this is where we start tracking the price, the flow of price once again. We can see that we've been bearish. We're now bullish, breaking up of structure, pulling back. Right here, we're going to find an entry on a lower time frame, and up we go. What do we now do once again? We break out of structure to the upside. We actually come back and test that area. Now, that is where we understand the break of a previous area of resistance becomes support. Now, that is not the way I trade. Yes, support and resistance traders will see this. This is not what I see. I see the removal of this area here of imbalance. Move it back. Then what I see, the removal of this area of imbalance, a new imbalance is formed. And that is formed right here. Where does the market come back to? Comes back to fill this imbalance, and then up we go. And once again, current price, we break out to the upside. And we can mark this off as another break of structure. Now that is how you can start reading the flow of movement of price. Once you understand this is the flow of price, you've got that direction, then you can start looking for those trades. So we'll carry on from the previous video. We went through where the market came down and we created, if you're watching to the point, that area, this is that reversal. There was the reversal pattern. I said to you, go and watch the other videos where we have a reversal from the low to the upside. In fact, this is actually more of a manipulation. Let's have the manipulation. So we manipulated this low and we turned back up. The reversal part was understanding this move here. When we saw the bullish candle closing back up, and that is where we knew price was going to go higher. Now from this point onwards, we were tracking price when we saw the break of structure. So remember, we're using that as a minor break here and a major break here. So we mark these out, we'll go through and carry on through the chart, and I'll show you two current price right now where I'm looking for the market to go next. Once we saw this break of structure, we draw this area of imbalance. So we came back to the 50% area, we saw a potential reversal to the upside. What did the market do? We then create another break of structure, and we continue to go higher. Now again, in here, we have an area of imbalance. Now this is the most important part of this video. When you're using this strategy and you're applying this in the markets, we want to see price holding above this zone. Now this is perfect to see the spike through and the reversal. We see a close through. We want to see a close back up on the very next candle. If not, and we see a close through, we're expecting price to head down to the next low in the market or the area of imbalance. Now you'll see this later on in this video, so make sure you keep watching, because this is gold for you to understand where the market's moving. So from here, you could have caught another trade. We have another break of structure. Again, back to the upside. Now, when we're looking for targets, that is something that I do teach inside that masterclass course, but we're looking to the left for our target. So it's pretty simple what we're looking for. We're looking for previous highs, previous areas of imbalance, previous areas of supply and demand. So from here, we're going back up. We're looking to the left. Where are we looking for price to go to next? Well, from here, this is going to be your first target. If we're entering down here and we're looking for price to take this high, that's going to be your next area you expect price to go to take this previous high for a continuation to the upside. And that's what happened. After we see this happening, where's your next area? Going to be for this area of imbalance. We have an area of imbalance left over, expecting that to be filled. Now for reversal, we can't see that close through, but we get the close through. And another candle closing through. We don't get the close back down. So after this, My next area I'm looking for price to go to is going to be these highs here. That's where I'm expecting price to go. Now, it's not necessarily going to do that, but it gives you an idea where we're looking for price to go. Now, this is our break to the upside. So we're looking for that first area of imbalance, which is right here. Now, look at where the chart came to. Now, before I go through this, I will show you what happened up here. But look, the market came down. We spiked through that imbalance. We held. We didn't close through. If it closed through this imbalance, we'd expect price to go for these lows here. But what happened is, when we went up here, we left a couple areas of imbalance behind. We had a small area here and one below that as well. And this is how you can read the chart. When we see this close back through this imbalance, we're looking for a new imbalance to be created. And that happens once we close through this second one. So remove this. Once we've closed through this one, we're expecting price to go here anyway. It does. We see the next candle spikes. Do you think this is a coincidence? Of course not. We spike into, fill this imbalance. Now we can mark this as a new area. This low to high of this candle, when this candle closed this imbalance, that created this area of imbalance. Now that is telling me when we bounce off this area, if we don't close it, the market's likely to go back up to fill this imbalance. Now if it closes through this area, we're heading higher to this high. So that is how you can start to track the direction of price. Now if price holds at this imbalance, this will be my next target to go to. We can remove this old area because it's been used. This is actually our new area here in the market. So we've filled this one. So we're going to leave it here at the moment. I'm going to actually remove that and place a level so it's easier to see. Now we're looking for price to either close through here or close through this zone above. Now we're still bullish if you understand the break structure, but if we break this low and we close through this area of imbalance, then we're definitely going to take this low. Let's go forward. So we've held at this area of imbalance and we've had a drop back down. And what did that candle do? What do we have in here? Small area of imbalance held within between those two areas. We've closed straight through. So for me right now, when we see this, that is your reversal. Now, if you're not sure what the reversal pattern is, again, watch the video at the end of this video, and then I'll go through and I'll show you that in the video. And then you'll have another video you can watch to understand it in much more depth. So we've closed through the reversal. Where's price going to go? We're going to go to either retest this area of imbalance, this low, but I'm expecting price to now want to close this level. And we drop, and if we do, we close straight through it. Okay, so we never closed above this area of imbalance. We made the reversal, and then we continue to fall. We took the low, we closed this area. What does that now show me? It shows me the market will want to go for this low. Now we're looking for an area of imbalance to be left behind. So this is now an area of imbalance. We mark our imbalances from the low of that candle and to the closed price. That is an imbalance in the market, what's being left behind. Yes, it's not a leftover area of imbalance, but it is an imbalance. So we're expecting price to push back up into this candle before we see a drop down. And that's where you can go to the lower time frames and start reading price by doing this. But we're going to take this low. Let's see what happens. So we push up into this area of imbalance. Now what that means, we're left over this area. That is a leftover zone of imbalance. So we may want to come back into this imbalance at some point to drop back down. Let's see what happens. We go sideways. Now that one candle, okay, let's go back so you can see that one candle went above the high. Let's have a look at the high of that candle. There is the high, so you can see. So we've got a high of 98169, the bullish candle 98170. So we just went above that candle, went into that area of imbalance, and we've dropped. And then the next candle you can see actually closed at the low, just closed through it. But we still have this area left over where we can still see price want to come back into. Now we have a push up and another push back down. So where's price going to go next? Well, remember, this would have been your next area expecting price to go. We're using those lows in the market. Where did that candle go to? It tested it. And we're testing it again. Testing it once again. And then we have a breakthrough. So we still have this area of imbalance left over. Price can still come back to this area. And we still have this area here. So where's the market now likely to go? We've closed this low in the market. This is the main low, not this one. This is our main swing low where we see the break to the upside. That means to me, this low is important. Look at how price was held at that area and we broke through. So we're likely to come back and test this area. What do we also have left over? Let's go forward. We have an area of imbalance. So we mark that out, drag that across. We have a very small area left over right here. See that? Area of imbalance. So we're going to see price push up first to fill that imbalance, test that level before we see the drop to take this low in the market into this imbalance. So there is your spike up into the area of imbalance, retest the low, now expecting price to drop for this area. Now it's not definite, but it's giving you an area where price is going to go. We can only now go for two areas, this area or this area above this high. That's where the market's got to go. So we've come back, we've retested, we've dropped, just closed below, so we're still looking very bearish. The market is here. Now, what have we just done? We just closed back above this area of imbalance and this previous low. So what was the rule I said at the beginning? If we see another candle closing bullish here, we're going to go up to this area. And this is how you can start then looking for your trades. But if we see it close back down straight away, we're going to go for this area. Simple as that. Now I'm going to remove this zone and just place a level at this low in the market. That's where we want to see price go to. Okay? And this one here, we're going to remove this zone and I'm just going to place a level right here at the moment. So you can see where price has got to go to. So we're trapped between those areas, but we have targets. So any trades you find here, you can start to look for a sell. Now, what do we also have right here in the market? We have some highs. So we could easily see manipulation occurring here, perhaps to the downside. Have a manipulation to downside. We just closed up. If we do close back down, we're going to go for this level. Simple as that. So we've closed back down. So at this point, if you've found a trade in here on the lower time frames at this area of manipulation in the market, then we can look to target this level and perhaps even go for this low if we close through it. Let's continue. So we may get a pullback. So there's a pullback to where retest this level again. And that's where we can then look to sell. Where we're going and continue sideways. And boom, we have one more push up. What does that do? That manipulates that high in the market and we drop down to where we test that low. So this is how you can track price. So from here, when we're looking for next, a close below this level, okay, to then continue down to this area to fill that imbalance. We're looking for the market to go back up to this area here. Okay, so we've closed straight back up. So from this point, are we going to go back up to this area? We've just fallen short at the moment there. And you can see we're now coming back down, closing back below this level. At this point, we've now broken this area of structure, bouncing off. We made a manipulation of these lows here. Okay, so we made this manipulation to the upside. We've found that this area has been bullish. We've pulled back. We've not actually closed. We've got to close. Let me just get my pen quickly. We've got to basically, this area here, we've got to close through this area to then take this low. That's got to happen first. If not, we're going to see the market want to go up to this area of imbalance. And then if it closes through, we're going to take this high. Then we're going to go for these highs up here. It's simple once you understand the way that actually the markets are moving. So from this area now, let's have a look and see where price is. Okay, so we're now stationary. We're in the middle. So where we expect pricing to go? Well, we broke this high. That's left. And if you understand your areas of supply and demand as well, an area of demand, we come back. We've bounced off this area of demand. Okay, but understanding what we're looking for, we're looking at price to go to this area of imbalance, what's been left over. That's where we want to see price going to, or we want to see it come back to this area of imbalance, which is now going to be from the low of this candle. This low is manipulated, and that's how we got that push up. But we have left this area of demand now, but we're still between these two zones. So price from here has got to go up to that zone, or we're going to look for price to then sell off there to take this zone here. If we go up here, because we're looking more bullish, mainly because we did what? We actually broke here, this high. There's a break of structure here to the upside. We then pull back to this area of demand. If we see a continuation up to here, okay, that's going to be a great area to look for that reversal pattern to then go back to take this zone here and to take this low. I hope you enjoyed that presentation of videos on the imbalance trading strategy, and it's going to help your trading and take it to the next level. Now, why not check out the free trading strategy class, and you can check that out right now.